Okay, so we just had the interest rate decision at the FOMC meeting, and you can see that the outcome of that decision sent the S&P up. It looks like a lot, but I'm looking at it on a 3-minute chart. It looks marginally up. If we look at Bitcoin, the Bitcoin price is 64,267. It was as high as about 64,500 just after the FOMC announcement. So let's quickly look at the FOMC announcement and understand what Powell actually did. Remember, we went into this with expectations that Powell wouldn't raise interest rates and wouldn't drop interest rates. And that's actually exactly what we got. So we got the following. The Fed leaves the rates unchanged for the 5th straight meeting. Fed expects 3 interest rate cuts in 2024, and I'll show you how that has improved since the last meeting. Core PCE inflation for forecast raised to 2.6%, so they're expecting higher inflation for longer. Fed says inflation has eased but remain elevated. They want inflation to come down to 2% before they actually make any moves. There was one thing which has changed since the last meeting, which is probably worth noting, and that is what we call the dot plot. The dot plot is where the Fed officials sit down and they almost vote what they think interest rates are going to be at the end of the year. And this is what the outcome of the dot plots look like. You can see in the December dot plots, most or some Fed officials thought there were going to be 3 cuts. In March, more Fed officials thought there were going to be rate cuts. So the Fed is actually becoming a little bit more dovish, and a lot of them are actually seeing a lot more rate cuts. So that is what we got to look forward to tonight. Powell's going to be speaking. We're going to be trading. I've got my amigos, my compadres, my partners here. I've got Sheldino and I've got Dylan here with us. We're going to be trading the FOMC live, listening to Jerome Powell live right here with you guys today. Remember, guys, if you're not already subscribed to this channel, this is the 2nd channel. It's called Banter Plus. Subscribe now to Banter Plus. This is where we bring you all the after hours stuff. This is where we bring you all the bonus content. And if you do subscribe to Banter Plus, you do get a chance to win the Banter bag. So when we get to 1 million subscribers on Banter, which is going to happen like in the next 200 days, and we get to 350,000 subscribers on Banter Plus, we're going to give away the Banter bags. So what are the Banter bags? We get pre-IDO allocations in amazing protocols, and we put them into the Banter bags. And when we get to that number of subscribers, we're going to give away these bags. These could be worth millions of dollars. You'll notice today we added a new protocol called Flash Protocol. This is a Bitcoin Taproot NFT protocol. It is one that's launching very soon. It is one of the only protocols that I know that actually uses Bitcoin Taproot as the platform. And I think it's going to be quite a good launch. We're going to be monitoring this launch, and that's now also in the Banter bag. So if you want the Banter bags, you know what you need to do. You need to subscribe to Banter. You need to subscribe to Banter Plus, and you must have an exchange account so that we can actually pay you. Listen, Jerome Powell starts talking in about a minute. Sheldino, you are on standby. You know when you'll let us know when the man's coming, right?
I'll let you know, bro.
All right, let's just share Sheldon's screen, Josh. So we've got Sheldon's. Okay, just share with us. Just share your screen with us when you're ready. In the meantime, let's quickly look at the charts. You've got. Let's quickly get some charts going over here. There we go. Well, okay, Sheldon, just fast forward. You see at the bottom of the bar there, you're not up to date on your. Yeah, so move that across and press play. Amazing. And then if you can, just make it a bit smaller and let us see the charts there as well.
Yeah,
and you can mute it.
I'm just worried. Let's try this quickly.
Just mute it for now. So we don't have to hear that terrible music.
It's quite relaxing, quite soothing.
Wait, let me try this quick. I just want to make sure you guys can hear it.
Okay, in the meantime, it won't affect the sound. Just open the small window and then just put chart windows next to it.
You happy, bro?
Okay, let's. There we go.
Just confirm we can hear.
Put us on we can. Put us on the 3-minute chart if you can.
Okay, so no problem. I'm on it.
Okay, 3 minutes is amazing chart to watch.
We got a 3-minute. We got Bitcoin on the left, and then
Bitcoin on the left.
Here.
Amazing. And then let's put Powell in the corner. I've got my Bybit account loaded. I've got my BitGet account loaded over here. So my new BitGet account is loaded. I'm ready to press the trigger with any new trades.
I think we're gonna dip and then get bought up after that. But I think there's gonna be like a wick, and you can see it already. I'm hoping to see that, and then I think it is buy. I think it's a lot.
All right, well, let's see. Let's get the other screen back on your screen so we can actually see Powell. You just switched off your screen.
We know run one side. What do you want? Run 48. 49.
It's not what I want. I want this correction to be over. I want the correction to be over. Sheldon, share your screen because I think Powell's on, sir.
Okay.
All right, share your screen with us, sir.
There we go. We got it. Sorry, you got me. What's this new system, bro?
I know.
Got a water guy here.
There we go. If you could just play that, and let's listen to Powell speak, sir.
Good afternoon. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. The economy has made considerable progress toward our dual mandate objectives. Inflation has eased substantially, while the labor market has remained strong. And that is very good news. But inflation is still...
He said good news.
Progress in bringing it down is not assured, and the path forward is uncertain. We are fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustainably strong labor market that benefits all. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Our restrictive stance of monetary policy has been putting downward pressure on economic activity and inflation. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are moving into better balance. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a solid pace. GDP growth in the fourth quarter of last year came in at 3.2%. For 2023 as a whole, GDP expanded 3.1%, bolstered by strong consumer demand as well as improving supply conditions. Activity in the housing sector was subdued over the past year, largely reflecting high mortgage rates. High interest rates also appear to have weighed on business fixed investment. In our summary of economic projections, committee participants generally expect GDP growth to slow from last year's pace, with a median projection of 2.1% this year and 2% over the next 2 years. Participants generally revised up their growth projections since December, reflecting the strength of incoming data, including data on labor supply. The labor market remains relatively tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 265,000 jobs per month. The unemployment rate has edged up but remains low at 3.9%. Strong job creation has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years, and a continued strong pace of immigration. Nominal wage growth has been easing, and job vacancies have declined. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. FOMC participants expect the rebalancing in the labor market to continue, easing upward pressure on inflation. The median unemployment rate projection in the SEP is 4.0% at the end of this year and 4.1% at the end of next year. Inflation has eased notably over the past year, but remains above our longer-run goal of 2%. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as from measures from financial markets. The median projection in the SEP for total PCE inflation falls to 2.4% this year, 2.2% next year, and 2% in 2026. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation.
He keeps saying the same thing, meeting after meeting after meeting after meeting.
The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are coming into better balance. We believe that our policy rate is likely at its peak for this tightening cycle, and that, if the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year.
Okay, so rate cuts this year, he just confirmed it.
We remain highly attentive to inflation risks. We are prepared to maintain the current target range for the federal funds rate for longer, if appropriate. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we have seen on inflation and ultimately require even tighter policy to get inflation back to 2%. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. The committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably down toward 2%.
I think the big thing
Of course, we're committed to both sides of our dual mandate, and an unexpected weakening in the labor market could also warrant a policy response. We will continue to make our decisions meeting by meeting. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 4.6% at the end of this year, 3.9% at the end of 2025, and 3.1% at the end of 2026, still above the median longer-term funds rate. These projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals. Turning to our balance sheet, our securities holdings have declined by nearly $1.5 trillion since the committee began reducing our portfolio. At this meeting, we discussed issues related to slowing the pace of decline in our securities holdings. While we did not make any decisions today on this, the general sense of the committee is that it will be appropriate to slow the pace of runoff fairly soon, consistent with the plans we previously issued.
That's bullish.
The decision to slow the pace of runoff does not mean that our balance sheet will ultimately shrink by less than it would otherwise, but rather allows us to approach that ultimate level more gradually. In particular, slowing the pace of runoff will help ensure a smooth transition, reducing the possibility that money markets experience stress and thereby facilitating the ongoing decline in our securities holdings, consistent with reaching the appropriate level of ample reserves. We remain committed to bringing inflation back down to our 2% goal and to keeping our longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and price stability over the long term. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you.
All right, so not much there, but we knew there wouldn't be much there. We're now waiting for the questions, right? That's the thing. Guys, smash the like button. Let's get as many people as we can here. Let's smash that like button.
Somewhat higher core inflation. They also show somewhat stronger growth. What should we infer from this notion that on average rates were kept the same this year, but inflation is higher and growth is higher? Does it mean more tolerance for higher inflation and less of a willingness to slow the economy to achieve that target?
Well, it doesn't. No, it doesn't mean that. What it means is that we've seen incoming, as I pointed out in my opening remarks, we did mark up our growth forecast, and so have many other forecasters. So the economy is performing well. And the inflation data came in a little bit higher as a separate matter, and I think that caused people to write up their inflation. But nonetheless, we continue to make good progress on bringing inflation down. And so.
When you just to follow up, when you say that you're willing to either maintain the rate for longer, what is the tolerance of the Federal Reserve for inflation coming in above its 2% target?
So we're strongly committed to bringing inflation down to 2% over time. That is our goal, and we will achieve that goal. Markets believe we will achieve that goal, and they should believe that, because that's what will happen over time. But we stress over time, and so I think we're making projections that do show that happening, and we're committed to that outcome, and we will bring it about.
Rachel, New York Times.
Rachel Siegel from the Washington Post.
Washington
Thanks for
Post,
taking
sorry.
our questions. You and others have been saying that relief on housing inflation is coming, but it still hasn't shown up meaningfully in the CPI or the PCE. Does that challenge your assumption about when the shift will finally break through, since it hasn't at that point?
So I think there's some confidence that the market rents, lower market rent increases that we're seeing will show up in measures of housing services inflation over time. There's a little bit of uncertainty about when that will happen, but there's real confidence that they will show up eventually over time. But again, uncertainty about the exact timing of that.
Okay. And will you be able to get overall inflation down to target if housing doesn't break through quickly, and does that affect the timing for eventual cuts this year?
We will get aggregate inflation down to 2% over time. We will. And I would assume that what we'll continue to see is we'll see goods prices coming into a new equilibrium where they're going down perhaps not as quickly as they had been earlier this year, where housing services inflation will come back down as current market rents are suggesting will happen, and where non-housing services will move back down. Some combination of those three things, and it may be different from the combination we had before the pandemic, will be achieved and will bring inflation back down to 2% sustainably.
Nick Timmeros of the Wall Street Journal. Chair Powell, during your congressional testimony this month, you said that your test for making the first change to interest rates does not require you to be terribly comfortable that inflation is at 2% because interest rates are well above neutral. At the same time, you said here after the last meeting that the first cut is highly consequential. Can you reconcile these views for me? If rates are well above neutral, why would the first cut be highly consequential? Is that because you anticipate one cut would be followed by one or two more along the lines of the recalibration you made in 2019?
Important question. Watch the markets now.
It's more, I would put it more in the context of what I said in my opening remarks, that the risks are really two-sided here. We're in a situation where, you know, if we ease too much or too soon, we could see inflation come back. And if we ease too late, we could do unnecessary harm to employment and people's working lives. And so, we do see the risks as two-sided. So it is consequential. We want to be careful. And fortunately, with the economy growing, with the labor market strong, and with inflation coming down, we can approach that question carefully and let the data speak on that. That's really what I was thinking.
How much of that inflation that we've seen so far this year do you chalk up to one-off calendar adjustment effects following a period of high inflation versus some change in the trend we saw in the second half of last year?
So I want to start by saying I always try to be careful about dismissing data that we don't like. So you need to check yourself on that, and I'll do that. But I would say the January number, which was very high, the January CPI and PCE numbers were quite high. There's reason to think that there could be seasonal effects there. But nonetheless, we don't want to be completely dismissive of it. The February number was higher than expectations, but we have it at currently well below 30 basis points core PCE, which is not terribly high. So it's not like the January number. But I take the two of them together, and I think they haven't really changed the overall story, which is that of inflation moving down gradually on a sometimes bumpy road toward 2%. I don't think that story has changed. I also don't think that those readings added to anyone's confidence that we're moving closer to that point. But we didn't. Last thing I'll say is we didn't excessively celebrate the good inflation readings we got in the last 7 months of last year. We didn't take too much signal out of that. What you heard us saying was that we needed to see more that we could, we wanted to be careful about that decision, and we're not going to overreact as well to these 2 months of data, nor are we going to ignore them.
I don't know why, but my meme coins are getting destroyed.
Really?
Hi, yes, Chair Powell. Could you speak a little bit more about the timing? Is there enough data between now and, say, May to be able to get the kind of confidence that you say that you still need, or by June, is there enough data for you? Just give us a sense of your thinking there. Thank you.
Yeah, so we make decisions meeting by meeting, and we didn't make any decisions about future meetings today. Those are going to depend on our ongoing assessment of the incoming data, the evolving outlook, and the balance of risk. So I really don't have anything for you on any specific meeting looking forward.
Okay, some of the altcoins are having good recoveries. Look at Phantom, look at Rune.
They're moving.
We'll take, things can happen during an intermeeting period if you look back. Unexpected things. So I wouldn't want to dismiss anything. So I just would say that the committee wants to see more data that gives us higher confidence that inflation is moving down sustainably toward 2%. I also mentioned, and we don't see this in the data right now, but if there were a significant weakening in the data, particularly in the labor market, that could also be a reason for us to begin the process of reducing rates. Again, there's nothing in the data pointing at that, but those are the things that we'll be looking at coming meetings, and without trying to refer to any specific meeting.
Chris.
Hi, Chris Ridgeway, Associated Press. Thank you. In the projections, there is an increase in the neutral rate, as you know, and higher rates, a quarter point higher rates projected in 2025, 2026. Can you speak about why might be behind that? Is there a real sense here that the economy has perhaps changed in some way, that higher rates will be needed in the future? Thank you.
So you're right, they're pretty modest changes, but you're right, there was an uptick in the longer run rate, and also there's a 25 basis point increase in 25 and 26. In terms of are rates going to be higher in the longer run, if that's really your question? I don't think we know that. I think we think that rates were generally low during the pre-pandemic, post-global financial crisis era for reasons that are mostly, important, slow-moving, large things like demographics and productivity and that sort of thing, things that don't move quickly. But I don't think we know. I mean, my instinct would be that rates will not go back down to the very low levels that we saw, where all around the world there were long-run rates that were at or below zero in some cases. I don't see rates going back down to that level, but I think there's tremendous uncertainty around that.
Great. And just a quick
Sheldon,
follow on.
Pull up the Phantom chart instead of Wall Street.
2.6% core inflation for the end of this year. It's already at, or you mentioned it being 2.8 in February. I mean, that doesn't sound like much disinflation at all. So are you still confident, or the last press conference you sounded pretty optimistic you would get more confidence through the end of this year.
About to break those highs, bro.
Is it right to say that this suggests you're not seeing a lot of disinflation this year compared to what we've seen 2023 and so forth?
I think that higher year-end number reflects the data we've seen so far this year, because you're now in this year. So I think that. Sorry, say your last part of your question again.
Are you still optimistic that you'll get the confidence you need this year?
I think if you look at the SEP, what it says is that it is still likely in most people's view that we will achieve that confidence and that there will be rate cuts. But that's really going to depend on the incoming data. It is. The other thing is, in the second half of the year, you have some pretty low readings, so it might be harder to make progress as you move that 12-month window forward. Nonetheless, we're looking for data.
We can't hear you when Powell's talking.
Readings that we had last year, and give us a higher degree of confidence that what we saw.
Can you hear me?
Yeah, we can now. But you got to play Powell.
I'm just saying.
Don't stop Powell, because our video is we're gonna fall behind.
Gina Smialik, The New York Times. Thank you for taking our questions. Per your comment to Ann that a weakening in the labor market would be a reason to potentially cut rates, or at least a consideration in making a rate cut. Would continued strength in the labor market be a reason to hold off on rate cuts? And just in general, if labor supply continued to rebound in 2024 the way it did in 2023, what would stronger hiring and possibly stronger growth mean for the path forward on policy?
Yeah, so if what we're getting is a lot of supply and a lot of demand, and that supply is actually feeding demand because workers are getting paid and they're spending, and that's, what you would have is potentially kind of what you had last year, which is a bigger economy where inflationary pressures are not increasing. In fact, they were decreasing. So you can't have that if you have the continued supply side activity that we had last year with both with supply chains and also with growth in the size of the labor force.
But so strong hiring in and of itself would not be a reason to hold off on rate cuts?
No, not all by itself, no. I mean, we saw, you saw last year, very strong hiring and inflation coming down quickly. We now have a better sense that a big part of that was supply side healing, particularly with growth in the labor force. So in and of itself, strong job growth is not a reason, for us to be concerned about inflation.
Neil. Hi, Chair Powell. Neil Irwin with Axios. How do you assess the state of financial conditions right now, and in particular, do you view the kind of easing in financial conditions since the fall as consistent and compatible with what you're trying to achieve on the inflation mandate?
So we think there are many different financial conditions indicators, and you can kind of, see different answers to that question. But ultimately, we do think that financial conditions are weighing on economic activity, and we think you see that in a great place to see it is in the labor market, where you've seen demand cooling off a little bit from the extremely high levels. And there I would point to job openings, quits, surveys, the hiring rate, things like that are really demand. There are also supply side things happening, but I think those are demand side things happening. We saw, that's been a question for a while. We did see progress on inflation last year, significant progress, despite, financial conditions sometimes being tighter, sometimes looser.
Apparently, the more likes we get and the more subscribers we get, the higher the price of Bitcoin goes, and the higher the price of Phantom goes.
On how the committee is thinking about inflation dynamics now. What we've seen at the beginning of the year, are they more one-off increases that will fade, or is...
I'm not pausing it, but you see this dominance drop?
Yes. Alts.
This is good. Alts, bro. Alts.
And also, housing prices have been sort of the Godot of this cycle, in that you keep expecting them to go down and they don't. How does the committee see this playing out forward since you've raised your inflation forecast?
So I see the committees looking at the 2 months of data and asking the same question you're asking and saying we're just going to have to see what the data show. As I mentioned, you can look at January, which is very high reading, and I think many people did see the possibility of seasonal adjustment problems there. But again, you got to be careful about dismissing the parts of the data that you don't like. So then February wasn't as high, but it was higher. So the question is, what are we going to see? We tend to see a little bit stronger, this is in the data, a little bit stronger inflation in the first half of the year, a little bit less strong later in the year. We're going to let the data show. I don't think we really know whether this is a bump on the road or something more. We'll have to find out. In the meantime, the economy is strong, right? The labor market is strong, inflation has come way down, and that gives us the ability to approach this question carefully and feel more confident that inflation is moving down sustainably at 2% when we take that step to begin dialing back our restrictive policy.
Well, you've talked about the desire to have confidence that inflation is continually moving down. Has the recent numbers we've gotten for inflation data dented that confidence at all?
It certainly hasn't improved our confidence. It hasn't raised anyone's confidence, but I would say that the story is really essentially the same, and that is of inflation coming down gradually toward 2% on a sometimes bumpy path, as I mentioned. I think that's what you still see. We've got 9 months of 2.5% inflation now. And we've had 2 months of kind of bumpy inflation. We were saying that it's going to be a bumpy ride. We consistently said that. Now here are some bumps, and the question is, are they more than bumps? And we can't know that. That's why we are approaching this question carefully. It is very important for everyone that we serve that we do get inflation.
Ooh, Bitcoin's running, guys.
Alts are flying.
I think the
20% candle on whiff.
Alts are flying, bro. Like I'm looking at the right here, seeing Sol
Powell's
back
dovish.
on it. Like,
Powell is dovish. Powell is dovish. Sheldon, what
First time
happened?
I have to come back and raise rates again, perhaps, if you cut inappropriately, prematurely.
Go to Edward.
Thank you, Mr. Chairman. Edward Lawrence with Fox Business. I wanted to ask you, you received a letter from, the Federal Reserve, first independent body, understanding Congress has oversight over that. You received a letter from Senators Elizabeth Warren and Sheldon Whitehouse that said...
Wait, Warren, let's see, how's my token?
Interest rates, because it says, quote, the potential that it may remain too high for too long has halted advances in deploying renewable energy technologies and delayed significant climate and economic benefits from these projects. So has higher interest rates caused that?
Have they? Well, first of all, I respect our, in our system of government, it is Congress that has oversight responsibility over the Fed. We place a tremendous amount of importance on our engagements with Congress and always treat them with great respect. In this case, I would say those are, our mandate is for maximum employment and price stability and the other things that we do. And that's what we're trying to accomplish. We're trying to do that in a way that sustains the strong growth we're seeing, the strong labor market we're seeing, but allows us to make further progress with inflation. That's how we can best serve the public and leave the other issues, which in many cases are incredibly important, such as those you mentioned, leave those to the people who have responsibility for those.
There was another letter from 24 lawmakers saying that the higher rates are squeezing the working people. How do these letters affect what you guys are doing policy-wise?
We receive these letters with respect, and we write careful responses and address concerns. We listen, again, because we're talking to the people who in our system of government have oversight over our activity. So but at the end of the day, we take that on board, but we have to make our judgments and we have to stick to our knitting, which is maximum employment, price stability, supervise and regulate the banks, work on the payment system, the things that we do.
Claire.
Alts are ripping, bro.
Thank you. Claire Jones, Financial Times. Thanks a lot for the opportunity to ask
Look at the
question.
Warren candle. Look at the candle on Warren, because they said Warren at the event. Look at the candle on Warren. Because he said Warren, you see.
Committee.
Where is it? Oh, wow,
Look
bro.
at that candle, bro. Like a 50% candle on Warren.
You got it. You got a nice bag there.
Thank you.
I got a big bag.
We're very consensus-oriented
wow, this dominance a good candle.
organization, and we do try to achieve consensus and ideally unanimity. People do dissent. It's something that happens. Life goes on, and it's not a problem. We've always had dissents, and so you respect thoughtful dissents very much. It's like you may not agree with some arguments, but you really want to understand them. So you may
Look at
read
the
a book
Dixie, Sheldino.
that you have long opposed just to understand that book. So I treat dissents with real respect as well.
Simon, one will be available.
Simon Rabinovich with The Economist.
Thank you, guys.
Can you hear me?
Yes.
We keep pushing into a trend resistance here.
Obviously, inflation is some ways away from target. Unemployment, though, if you look at the projection for the full year, 4.0%. In February, we were already at 3.9%, so quite close to the median projection. Are you concerned at all that, notwithstanding the very strong jobs growth, that in fact there may be some cracks appearing in the employment market? You talked about a significant deterioration in the labor market being a condition for easing rates. What would constitute that in your books? Thank you.
So we, of course, monitor it's one of our two goal variables. We all monitor the labor market very, very carefully, and I don't see those cracks today. And we follow all the possible stories that are out there about there being cracks. But the overall picture really is strong labor market, the extreme imbalances that we saw in the early parts of the pandemic recovery have mostly been resolved.
Aurelio is at all-time highs.
Growth. You're seeing big increases in supply. You're seeing strong wage growth, but wage growth is gradually moderating down to more sustainable levels. In many, many respects, things are returning more to their state in 2019, which we can think of as normal for this purpose. That's job openings and quits, and surveys of workers and businesses are always interesting on this. You know, how easy is it to find a job? How easy it is to find a worker? Those surveys have both come down. So the labor market's in good shape. You do see things like the low hiring rate, and people have made the argument that if layoffs were to increase, that would mean that the net would be fairly quick increases in unemployment.
Sheldon, we want to see phantom.
Volumes are very, very low, and if anything, have tracked down a little bit. So, watching it carefully, don't see it. And when I say
areas,
I use the term unexpected weakening in the labor market. So, we do expect the unemployment rate to.
Bro, this is the
forecast
get us to 1.5, 1.6. I think it's the next week.
The longer unsustainable level.
Just got to get through
That's just people's forecast, individual forecasts. But we're talking about something that's unexpected. That's where I'll leave it, though.
Steve.
Steve Matthews with Bloomberg. You mentioned at the beginning of the press conference that the committee felt it might be appropriate to slow the pace of asset runoff fairly soon. I'm wondering, when you say fairly soon, does that mean that the committee would meet about this again in May and a decision could be reached that soon? And I was wondering if you could also just describe the scope of what the committee is discussing here. You're at $95 billion of caps right now. Would that be cut about in half or something in that nature? Thank you.
So that is what we're discussing, essentially.
He's read a dog, bro.
And we're not discussing all the many other balance sheet issues. We will discuss those in due course. But what we're really looking at is slowing the pace of runoff. There isn't much runoff among MBS right now, but there is in Treasuries, and we're talking about going to a lower pace. I don't want to give you a specific number because we haven't had an agreement or a decision, but that's the idea. That's what we're looking at.
Brad, how did you put a dog, bro? I also want a dog. How do I do that?
This is me, Sheldina. This is me. I'm hosting.
The idea is, and this is in our longer run plans, that we may actually be able to get to a lower level because we will avoid the kind of frictions that can happen. Liquidity is not evenly distributed in the system, and there can be times when, in the aggregate, reserves are ample or even abundant, but not in every part. And those parts where they're not ample, there can be stress. And that can cause you to prematurely stop the process to avoid the stress. And then it would be very hard to restart, we think. So as something like that happened in 19, perhaps. So that's what we're doing. We're looking at what would be a good time and what would be a good structure. And, fairly soon is words that we use to mean fairly soon.
And will there be a discussion about returning to an all treasuries balance sheet at some point?
So that our longer run goal is to return to a balance sheet that is mostly treasuries. I do expect that once we're through this, we'll come back to the other issues about the composition and the maturity and revisit those issues. But it's not urgent right now. We want to get this decision made first, and then we can, when the time is right, come back to the other issues.
Hi, Victoria Guida with Politico. Also on the balance sheet, can you talk a little bit about how the outlook for the banking sector might impact your balance sheet plans? Do you worry that as deposits start to shrink that we could see more turbulence?
We'll be watching carefully, but one of the reasons we're slowing down, we will soon enough, fairly soon, I should say.
Right, that's rude. It's just killing me.
We want to avoid any kind of turbulence. I wasn't thinking particularly about banking sector turbulence, but We had some indicators.
Torture.
The last time, this is our second time in doing this, and I think we're going to be paying a lot of attention to the things that started to happen.
No, and Rand told me to wait for $5 when I was waiting.
At the end of that
we were waiting for our entries, Ron.
We were waiting, Ron.
Short reserve situation, and we don't want to do that again. And I
made me feel super bearish this morning.
See, but it's so nice. I don't know if you can you hear me good now, Dope?
I can hear you.
It's so good, like on these higher time frames, to catch these flags when these flags are happening here.
And where secured rates are relative.
Like a lot of them are doing it, and I'm seeing it happening with Doge at the moment. So I'll show you guys Doge for a second.
Similar signs, though.
Well, is it also because you're not sure exactly how the reserve supply will react once the
like
overnight
look
reverse
how
repo
Doge.
facility?
So if you like what thought changes did, yes, sir.
I think we broadly think that once the overnight repo facility stabilizes, either at
yes, Ron.
No, show us the charts. We're watching the charts. We're more excited about the charts than Powell, that's for sure.
Yeah.
Pretty close to
okay, so I'm just going to turn this down a little bit.
That's what we think.
Markets are flying. So guys, a lot of these early wedge breaks we want to get. Like Doge is popping now. I see DOT as well. I see Arbitrum. I see Link.
Well, you said
that
good.
We got to break the highs though.
Sooner could get you to a smaller balance sheet size. Does that mean you don't have to make a decision on when to end QT at this point, and will you be setting up the process for deciding that sooner, or will you wait until we're close to the end?
So it's sort of ironic that by going slower you can get farther, but that's the idea. The idea is that with a smoother transition, you'll run much less risk of kind of liquidity problems, which can grow into shocks and which can cause you to stop the process prematurely. So that's where, in terms of how it ends, we're going to be monitoring carefully money market conditions and asking ourselves what they're telling us about reserves. Right now we would characterize them as abundant, and what we're aiming for is ample, and which is a little bit less than abundant, right? So there isn't there's not a dollar amount or a percent of GDP or anything like that where we think we have a really pretty clear understanding of that. We're going to be looking at what these, what's happening in money markets, in particular, a bunch of different indicators, including the ones I mentioned, to tell us when we're getting close. Then, though, you reach a point ultimately where you stop allowing the balance sheet to run off, but then from that point, there's another period in which non-reserve liabilities grow organically, like currency, and that also shrinks the reserves at a very slow pace. So you have a slower pace of runoff, which we'll have fairly soon. Then you have another time where you effectively hold the balance sheet constant and allow non-reserve liabilities to expand. And then that ultimately brings you ideally in for, brings it into a nice easy landing at a level that is above what we think the lowest possible ample number would be. We're not trying for that. We want to have a cushion, a buffer, because we know that demand for reserves can be very volatile, and we don't want to again find ourselves in a situation where there aren't reserves. We have to turn around and buy assets and put reserves back in the banking system the way we did in 2019-20.
Nice. So just pull out BTC on that pullback trend from the high.
Dude, look at who I am. Look at my avatar.
You said you're waiting to become more confident that inflation is getting to your 2% goal before you cut rates. Can you just sum up more specific?
Pull that BTC trend on the 2-hour on the highs.
Sure.
So we're pushing into this resistance here.
We're looking at the incoming inflation data and the
Yeah, I
context
got
of
this
it and what they're telling
trend.
us.
So this is
that'll
the
be-
bounce
there
that
we
we
go.
spoke about on the show.
So
Yeah,
obviously
it's got to
that's
get
more
through.
confidence that inflation.
To be honest, we should rally to 69 here to be
Toward
sure,
2%.
and then there should be a little retest or something after that. But we
Of
got to
course,
get
we'll also
going.
be looking at all the other things that are happening in the economy. We'll look at the totality of the data, including.
How did Rand make me
everything,
look like this
essentially,
person?
as we make that.
This person is
assessment.
Elizabeth Warren.
one of his memes.
Inflation data to come in.
Dude, you get naughty when you're quiet, bro.
Wages is one thing. We don't. Our target is not wages. It's really inflation. We would look to the fact that wages.
We're seeing a lot of alts now moving into resistance, big resistance zones, while BTC is pushing into resistance. So if we get a rejection here on BTC, then these alts.
I'm hoping, but the rejection, higher low, I'll buy. Like, I think that should be the one to buy.
But it's just exercise caution here now. If you're buying alts now, you're buying into.
Yeah, just wait. Yeah. Wait for another quick dip, and then
I don't think mostly by wages. That wasn't really.
Brand's waiting for $5 on
But we
Thorchain.
do think that to get inflation back down.
Guys, I'm not in a rush to buy. I'm just not rushing to buy.
2027.
Yeah, but me and Dylan didn't buy.
Then you should. Then you
We
should
were gonna go
DCA.
long this morning.
We were like 1% away from our entries today on Rude, and you scared us.
Yes, you did. You scared me a little bit. Talking about a $48,000 Bitcoin. I'm like,
Burning
bro.
me. It's proper burning me watching this guy.
Chair Powell, could you say at this meeting whether there were more officials who wanted to be careful and go slower
how's this Thorchain pump?
about rates than were in? Was there,
So wrong.
was there that
Yes.
sense of maybe it's smart to wait? Thanks.
I guess I'd put it this way. If you look at the incoming inflation data that we've had for January and February, I think very broadly that suggests that we were right to wait until we're more confident. So I think.
What is this thing?
I didn't hear it.
What is this thing? I can't even see it.
Not information. We should
You're Joe Biden and Sheldon's Warren.
Be careful as we.
Oh, this is so good, bro. How do you do this? This is great.
Here, let's listen to Powell. One more.
Thanks, Chair Powell. Brendan Peterson with Punchbowl News. I wanted to ask you about central bank digital currency stuff. We've been hearing a lot from Republicans in Congress about what the Fed is or isn't doing in a digital dollar. But folks, I know you have said to Congress that you are going to wait for approval before the Fed does anything, launches anything. But folks like House Majority Whip Tom Emmer have said that the Fed is either actively researching or hiring personnel to study the implications of the CBDC. Can you give us any clarity on what the Fed is doing right now on a digital dollar?
Sure. So I think we've been pretty transparent on this, but I'll try harder. So we are not getting ready to. We haven't proposed. We haven't come to a conclusion that we should propose, or anything like that. That Congress consider legislation to authorize a digital dollar, and it would take legislation by Congress signed by the president to give us the ability to do what we think of as a CBDC, which is really a retail CBDC with the public of it. So we're just a long, long way from that. What we are doing, and I think what every major central bank is doing, is we're trying to stay in the frontiers of what's going on in digital finance. And it has many, many different areas. You know, it has applications in wholesale finance, in the payment system. And so we to serve the public, these issues have become very front burner in the last 5 or 6 years. We need to be knowledgeable about all that. So we actually do have people trying to understand.
I don't know about you, but I'd kind of hope there's two areas to possibly add. So obviously the break.
Yeah, just mute Powell for a little bit. Let's just discuss what's going on. So I mean, I think we pretty much got the gist of what Powell was going to say. He's been very dovish. That's why the market's running. Yeah, I mean, I have taken one position while we were live. I took one position because I don't want to miss out. I took a position on CETUS, which is the DEX on SUI. And the reason why I did that is I said, look, if when we bounce, SUI is one of the plays that I actually want to be playing. So I took a long here on CETUS. I was going to take it on BitGet, but BitGet doesn't have a perpetual on CETUS. Otherwise, I would have taken it. All right, Sheldon, talk to us. Dylan, Sheldon, talk to us about the charts. Biden, Warren, talk to us about the charts.
Oh, we look great here.
My general view is we've seen our BTC pump. That's great. We've had good news and everything, but the picture we're seeing here is BTC's at resistance right now. You can see it's simple.
Here we go. Yeah. This is important.
Resistance now. So if Sheldon's going to pull up some alts here, you're going to see similar timeframes. There's going to be resistance now. So we just need to be watchful.
Yeah. So some of them are breaking early, but like this, right? We just got to get through this trend here, so we can start making some higher highs again. And so this, we want to see the continuation to at least 69, or there'll be another dip.
When do I invalidate
another dip here?
When do I invalidate my thesis around a dip, around the correction? In other words, when do we confirm
the break here? Because this is 4-8 hour. Getting back into trend again. All those previous trends that we lost, which was the original trend that came all the way. We get back into that again, then we're back, right?
But I mean,
back to the
until we break all-time highs, runs correction will be on.
No, I mean, I think all-time highs is a bit late. Surely you want to catch it on the way up and not when it breaks the all-time high, because by that time the alts will be crazy.
There's a big level here.
Yeah, so Ran, there's the main momentum line for Bitcoin. Like we held it, and I think that's the big thing. That's your sort of warning sign of 50,000s or anything like that. So until then, if we break another flag here, we will attempt the highs again, or attempt at that higher range. And I think the big thing for me is just seeing this dominance trend sideways. To see the drop. Bitcoin doesn't have to break highs yet for the alts to fly. So things like ETH that came down really hard, hit good levels. Like I'm expecting more upside here, but I do think there's possibly a little short-term dip to load up again. But if we get back to 70, then I think up first more than to your levels.
So but I think 70 is late.
69K is a big level for us here.
Okay.
Big 618.
Yeah, so right now, buy your altcoin trend breaks. Like that's the ones, because they're breaking early, right? Bitcoin hasn't even broken this trend yet, but your alts are breaking them. So for me, the ones that are breaking, it's you got two ways here. Either you're going to get another 20-30% dip, or you're going to miss out on 50% gains. So you got to sort of like put yourself in that 50-50 boat.
So I think for me,
it could be the big explosion.
Yeah, for me, I think it'll be more a time thing. In other words, I want to just see that tomorrow, when this news settles in, Bitcoin is still in an uptrend and not in a downtrend, because it takes the market time to process all these decisions, right? Mm-hmm. So I want them to confirm with us that there is a downtrend, an uptrend, and then of course, as I said, if Powell, one thing I said would change my thesis is if Powell goes dovish. He is dovish. I want to see how the markets respond.
Yeah, let's get through trend first. Now that we're below trend, your possibility of lower is still there. But I think if we start cracking the trend, I think we're going to start the squeezes. I was even looking at the liquidation maps, and there's quite a bit building up, quite a bit of yellow on the tops here at the moment. So I think there's a couple of squeezes if we get through those levels.
Yeah, guys, just a few things while we're all here. So number one, I don't know if you saw what I was doing while the FOMC was on. But what I was doing is I was watching the banter bubbles. I was on the 5-minute performance and I was watching the newsroom at the same time. Now, while we were live, what I saw was I kept seeing all this news breaking. So as Powell was speaking, all this news was breaking and the tokens were actually moving as the news was breaking. So that's usually how we use the newsroom. Also, remember, if you're not already subscribed to this channel, this is where we're giving you all the extra shows, the meme shows, stuff like that. You can move the meme faces for now, and you can leave me with a hat if you want. Subscribe to the Banter Plus channel. Let's carry on degenning a little bit, just while the going's good. I think for me, if Bitcoin continues this upward momentum, 66, 66.5, then I'm going to have to change my thesis and say, okay, maybe this Powell's basically spoken us out of a downtrend. But I'm wary to say it so early because I've seen these FOMCs, and actually it takes the market 24 hours to actually process what's going on. You can remove the dots.
There's a bit of excitement at these times. But right now BTC horizontal resistance, trend resistance, and 382 fib resistance. So this is actually quite a big zone here.
Dill, do you want to share a screen? Do you want to share a screen and share some charts? Yeah, you can share a screen, share some charts.
There we go. Yeah. Share your stuff. I agree. I'm hoping for the dip to add, but I don't know. Things look hot. And the thing is with Sol, if Sol gets through that 200 properly, then it's all-time high as the next weekly target. It's insane.
Yeah. I mean,
sharing.
You are sharing. All right, Dill, I'm ready when you are.
Yeah. Okay, there you got it. Okay, so this is how I'm seeing it now. I mean, for those of you that don't know, I love fibs. I trade with fibs all day long. You're going to see it on all my charts.
I'll be back now. You can just take me off.
Big zone here for me. 382 horizontals in play. So this is huge. I mean, we've got 3 reasons that tell us that this is a resistance zone. So we just need to be cautious here. Bullish for me, BTC. If we pop this guy, we've got some horizontal here. Look for that rejection and then look for this retest here. And then the next big one for me is it's going to be the 69 run. I think you agree. It's 618 horizontal. You were talking about this level just now. I think that's huge. Okay, so that's going to be a telling one for us. And that could be the one that sends us to your 49K. I think you were
let's look at well, exactly. Look, I'm not looking for 49K. I'm saying my worst case scenario would be a correction to 49K. But again, I remain at the mercy of the market. If with new information, the market throws new things at us. Powell was much more dovish than I actually thought. Question is, was he dovish enough to completely reverse this? I think tomorrow is going to be the confirmation. So tomorrow we'll look at what the ETF inflows are. We'll look at the sentiment of the market, and that'll tell us whether this thing's turned or whether this is just another little bounce. That's the problem. It can be just another little bounce. That's
so
the thing.
Such a massive sell-off here. I mean, it would be expected if we bounce 10 or 15%. It's not unreasonable now to get some kind of bounce. So we can't get too excited. We just go level by level. We play these trend breaks. We play the retests, those type of things. We cautious. At something like 69, we got to be careful.
Let's look at some alts. Let's let DJ in a bit. So take me to Phantom. Talk me through what you're seeing in Phantom.
Yeah, let's go Phantom. So here's my Phantom play at the moment. So yesterday I was looking for some kind of consolidation, some kind of flag during this whole pullback that we were having. I was saying if things are going to go bearish here, this is what we're actually looking for. This is really what we want. It's a nice little bullish setup. So we could be depressed while BTC is pushing down to 59 or wherever it was going to go. But if we get some kind of flag here, it's actually better in the long run. But if Phantom's now going to pop this resistance zone, so let's assume now it doesn't form a flag. Let's assume things go bullish here for us. We just want to see it break this weekly convincingly now. So we rejected off here the other day, big pullback. Now we just want to see a nice clean break here, and we want to start building in this range, because the next trade for Phantom, if you've missed the Phantom trade, there's another trade coming, and it's a huge trade. It's actually bigger. It's a 60% play here. So the leverage traders are going to get very excited when we get our entries up here. But we want to clear this area. We want to confirm support here on the weekly for Phantom. So I'm super excited about this guy. And another nice one here for us. What did we have? We had Link. Sheldon and I were talking about Link for 2 days. We've been calling this bounce here for Link. So those of you that are in Sniper Club, you would have seen these charts. This is in our this is in my section. Sniper Club, I update these charts daily. These were the 2 long options that we gave for Link. These are your options. These were your long zones. And this hit a nice little area for us. So for me, Link traders now, if you took this trade, you can actually move your stops now to your entry, or if you want, you can bring your stop to just under this candle low. Because if we start closing under this candle low, then we know, balance of probabilities, we're probably going to get a bounce at this 13.7 region. So then we just need to be a little bit patient. So let's see how.
What's the key level on Bitcoin that we want to break today in the short term? I'm not talking about the long term. Well, I think you were looking at like a 2-hour chart or a 4-hour chart. What were you looking at?
I want to pop the 65,800. This is a
65,800.
Yeah, it's a 382 and trend resistance and horizontal. So for me, it's a big zone. For the things I look for on my charts, that's a big area for me. And you can see, if we zoom in here, you can see it's rejected here before once. It's rejecting again. You can see previously this was support. So we know it's a resistance area. So if we crack that, the exciting thing about this is that then this can become our support that we can start playing with later if we want to get bullish on things. So could be quite interesting. And then the bulls are going to come out and they're going to say, oh well, look at this.
Let's go to Rune. Let's go look at Rune. I see Rune's actually pumping. So let's take it. Go.
Run. This is killing you. Here's your entry. Your entry was here at around about 5. So we were saying, okay, well, maybe we're going to get it down there. And that was a nice little trend area. So yes, of course, it can still come back there. That just because we've had a bounce doesn't mean that we are now, we out of the woods here. We could easily just have a situation like this and hit your 5. So that is definitely in play for us. So we can't get too excited here for Rune. We just, when you get a pump like this, you want to just kind of print some higher lows and things like that and just gradually make its way up. You don't want to go too fast, because then we know sometimes you can get these bigger pullbacks that can burn us. So let it, hopefully it's just going to settle a little bit, and then we can get more entries on Rune if you missed this first one.
I see some news has just come out. I want to just read the news. Robinhood launches a crypto wallet on Google Play. I mean, that's huge for adoption. Robinhood is absolutely massive. quick one, guys. If you want to be trading with us, there are links below to Bybit, BitGet, 𝗕𝗫𝗕𝗕. If you want to trade options, Bitflex, BingX, OKX. Also, if you want to trade on a decentralized exchange, or if you live in a country where they don't allow people to do this, you can go to Evo. Evo allows you to trade all these perpetuals. You can trade with us. Tomorrow we're going to give away one of the Apple Vision Pros. We're giving away Apple Vision Pros to anyone who signs up. So a lot's going on. There's links below to all of it. I'm looking at the short time frame. Have a look at the short time frame here. The short time frame is going slightly red, slightly red. On the 1 hour, we're back in the green. We're quite strong in the green. Render's up again to 11.96. Phantom is at 106. WIF is back at $2.46. So good temporary bounce. We're still waiting for that 65,800 level. That's the level that we actually want. That's the one that we actually want to break. Let's look in the chat. If you guys want us to chart anything specific, let's chart them.
Yeah, I mean, another one I want to talk about. I mean, today's been all about Ondo while you wait for the chats there. But Ondo and 𝗏𝗏𝗏, these RWAs and things, they've been flying today.
Because BlackRock started a real world assets tokenized fund, essentially. That's what it was, right? So that's why all the real world asset narrative tokens are having their day in the sun.
So is this sustainable? I mean, is this not?
Look, I think there's going to be. I did a show earlier today. If you didn't watch my show earlier today, go and watch my show. I said, look, when this market turns, it's not going to be the Solana and the meme coins that are going to be running. I said there are 5 narratives that are actually going to be running. What are the narratives that are going to be running? Here they are. I did speak about it at length on my show. So Telegram, the narrative of Telegram; Base, the narrative of Base; real world assets; the Move, which is Aptos and Sui; Phantom, and then decentralized social applications. I think that's what the next cycle is going to be at. So that's what I think is going to happen. So this is what I think the next up cycle is going to be, whether it comes today, tomorrow, in a week, whether we get a flash out. This is what the next up cycle is going to be, right?
So we're not into AI anymore. Is that taking a backseat?
The way I see it is that every cycle brings with it a narrative. I think the first cycle was all the Cosmos tokens. So we had Celestia, we had Injective, we had all those Dimension, all those Cosmos tokens. Then that cycle moved, and that went into the AI cycle, and that went into AI and Solana and meme coins. And then I think that cycle now, takes a bit of a chill pill, and then we move into the next part of the cycle. Like in a cycle, the bees, I don't know if you've ever heard the bees. They're quite loud. They fly from flower to flower to flower, and they go and suck the honey out of the flower, and then they move on to the next one. So the bees are back, and the bees are flying around.
I've been very upset with Injective, Ron. So, I mean, what you're saying is making sense to me now, because it's been one of the worst performers in the last couple of days.
But it was one of the best performers in the first cycle, right?
Yes. So when we broke this trend here at the top that you can see on my screen, when we blew this, for me, we were going to 80. That's what I was looking for. And it was almost like the biggest fake out in history. I mean, it's
not Cosmos season, sir. It's not Cosmos season. Cosmos season was 2 seasons ago. Since then, we've had Cosmos season, which was 2 seasons ago. Then we moved on to AI and Solana. That was like the next season. Now, I think the next season is the Telegram base, Move, real world assets, and Phantom, and maybe some of the decentralized social applications. I think, look, I mean, again, someone says, look at 𝗏𝗏𝗏𝗡. 𝗏𝗏𝗏𝗏 is great. I mean, from a tech point of view, nothing can beat them. Let's look at the charts. Let's Dylan do the master.
I'm glad Phantom has come alive again. I must say, I'm very happy with that.
Every bull market, Phantom has its time in the sun. And it's always Андреј Кронje, doing magic things. They actually tweeted something the other day about all the amazing things that are actually happening. I'll try and find that tweet while you're charting 𝗏𝗏𝗏𝗏 for the Nick Phantom. I don't know what Nick's. Here we go. Nick Phantom. Here we go. He tweeted something the other day about all the amazing things that are happening in Phantom. Yeah, so I'll actually show it to you quickly now. So he said, here are a few ways to prepare for Phantom. There's, so there's this. Wait, hold on. He spoke about, he did a tweet the other day. We spoke about all the amazing applications that are currently here, Phantom season. So there's meme coins on Phantom. There's games on Phantom. There are these are all the perps. Links protocols launching perps. Thunderdome SoFi is launching SocialFi. Debitor Finance is peer-to-peer lending. So that you see they playing into all the narratives with this new Phantom Sonic. Phantom Sonic is their new tech stack, which makes Phantom an ETH layer 2. No, not, yeah, I mean, you can say it's an ETH layer 2. It's a parallel chain to ETH. It's almost an ETH layer 2. Take me to 𝗬𝗏 and tell me when 𝗬𝗏's getting to $180, sir.
So you got work to do here. So, I mean, they actually faked us out. They tried to get us down. The other day, it was taking some proper blows. We had the market melting down, but 𝗬𝗏 was taking proper pain here. And they faked us down into this range. I actually thought we were coming back to this 25 level. So I had my eyes on this guy because we had this 50-day moving average pushing up. And I thought we were going to get a beautiful long here in this zone. So I was sitting, waiting patiently here. But now we've reclaimed a big zone. So you want to watch 32 as support. You can see why this is great. This is a 618. That was a previous support for us. It was horizontals as well, tied in nicely. So if you're trading this, 32.4 is a really nice support zone. So if you get this pullback, look for something in that zone there, this 32 and a half level, anywhere around there. And then what you need to watch out for, big area. You can see this is a big zone. Look at this horizontal here. So you're
40.
watching, just under 40. So if you're trading short term, you want a TP just under 40. Just expect some kind of reaction there. Expect something to go on if we do tap that zone. And then once we crack that area, then it's it's a simple play. We're going to look for that break. We're going to look for the retracement here on some of these fibs. We're going to find what fib is sitting here, and then we're going to send this thing a little bit higher. So I think just watch for now. Watch 40 as your target and 32.5 as your support level.
All right,
Just
guys. A few more charts for the master of entries, as his wife calls him. Clearly not the master.
He's the dad of three, bro.
He's a dad of three, so he's the master of entry, not the master of exits. He's the yeah. I mean, there was FUD today around ETH, which is kind of like telling. I don't know if you guys saw the FUD around ETH today, where the ETH Foundation was subpoenaed, and so they think that the ACC or the government's mounted an attack on ETH because they don't want to approve the ETH ETF. I mean, the ETH price didn't move. Basically, the market's saying to Gary against that, we don't care about your lawsuits anymore. Seriously, go and you know what you need to do with your lawsuits.
There was a flush, though. It put us under pressure. I mean, we were sitting in some leverage positions there. We did feel the heat.
Then your leverage is too high.
It kind of feels this bull market. The only thing that you're suffering is leverage. Like everything else gets through the waves, but leverage is the one that
it was a 7% move on ETH. I mean, it was quite big. 7% is quite big for ETH, on a headline to come out.
True. True story, but it's straight back up, didn't it? It's basically
straight back up. So
it is up. It is up.
Yeah. I mean, lots of liquidation hunting. There's lots of liquidation hunting in this. Every dip becomes a liquidation hunt in this scenario.
Can I show one or two here quickly?
Of course. Let's.
Okay, so one that hasn't been available for a while is Casper.
Okay, wait,
so
hold
I think
on.
with this thing,
we need to get. There we go. Okay, there we go. There's Sheldon. Are we watching Sheldon's screen now?
You can see it now.
Yes, we can.
So this is good. This is nice. Obviously, this thing was at 19 cents, back now at 12, but it's nice when it like slow bleeds like this for a couple of weeks to the downside, and this is a very bullish pattern. So this is one that I think is going to still continue to run massively this bull market, but you'll see when it has these long drips here, look how quickly it accelerates when it gets out of them. So I think this one, it was a bit too expensive a while ago. I think it's still going to do a lot. So I think the break of this wedge is good. There was a couple more. So let's just see here quickly. What's your thoughts on Flow? Is it good fundamentally? Chart looks insane, but I'm just asking.
Okay. It's okay. It's not one of my favorite tokens. There's so many tokens. It's not one of my favorite. They haven't done anything amazing for a long time. But I mean, that's not to say that they can't do something amazing. They can. So, but it's not like right now. Would it be one of the main tokens that I ape into? No. There's much better tokens out there.
Yeah, I think this is I don't know if you could drop the screen for a second. A quick debate. Like it doesn't matter. I know the quality of the token what you're speaking about, but a lot of these tokens, these old psych tokens that broke from the bottom of the range, like everything has like really just shot up the other side. Why do you think what does better tokens fundamentally matter right now than actually trading the market? Like, because better ones are ones that have already like, they're quite tough. Like, what is the argument here? We talk about making money in the bull market, and then we're talking about a bear market that's coming in the next, maybe a year or a couple of months from now. And so it's about making money now and then survival. So I get getting into the good stuff when it's time for
if you've got two tokens that are going to run, and one of them is a good quality fundamental token, and the other one is a bad quality fundamental token, rather take the trade on the good fundamental token, because that way, if the market does turn, at least you've got a cushion. because the bad quality fundamental token will get you destroyed, right? So my feeling is, always protect your downside, and the upside will take care of itself. We always say, look after the downside, the upside will take care of itself. How do you do that? You make sure that you're playing better tokens. Like, look, there's a lot of
here's the example. Here's 𝗕𝗫𝗢𝗙. Old cycle, but every coin is completing the cycle. And, you look at something like this, you're looking at something, that also starts becoming 3 to 5x and these sort of things. So the reason why I'm just asking is because it's like people sort of sit in your hands, you're in the quality, but they already all done hundreds and hundreds of percent, like the top quality. Like they're already like there. And I kind of feel we're getting to a risky point. If you're buying a lot of Solana at 200, I do feel in the next bear, you might be in a little bit of blood. Like
maybe, but remember, Solana's already had its main run, and it might continue to run, and I'm sure it will. But it's had a very, very, very big run, and now what I'm looking for is I'm looking for the next generation of tokens, the ones that haven't had their big run, right? So what are those? Phantom hasn't had its big run yet in this bull market. 𝗬𝗎 and Aptos haven't had their big run yet in this market. So I'm still looking for those guys to have a run. I think Rune will have a second run. It's had one run, but I think it will now have a second run in the market because I think it's a very underpriced token. Telegram, I think TON. I don't know. Maybe look at the chart of TON. I don't know who's driving screens there. Sheldon, Dylan, one of you drive screens.
Joe can go. He's got it there. You can just put his up.
Yeah, let me find it. Okay, I've got one here. Yeah.
So Telegram for me is something that I'd be looking at. I just think that eventually this thing's just people are gonna realize, hold on, Telegram has 900
but like,
million.
look at that. That's what I mean. Like a lot of quality is gone. Yeah, now it's like, is it risky getting into quality now, or is it like, it's a tough debate.
I wouldn't be buying shit.
Buying bottom range tokens.
Again, there are so many good quality tokens on the market. Why take a risk and buy a bad quality token? If it turns, the bad quality token is going to get destroyed. With so many good quality tokens, why try and chase a little bit of profit in a bad quality token? We know how quickly this market can turn. We know how quickly the market will turn, right? When it turns against you, the tide's going to turn against you super quickly. Do you want to be in bad tokens or good tokens? I don't know. Every person must do what they want.
It's debatable. Like Solana was good, right?
Yes.
A lot of tokens were good. Everything went down 90%.
Yes.
So it's like really tough. Like what you debate here, because all of them, like everything just went absolutely. Solana went to $8. I know it had all the news and stuff, but still, like that's 260 to 8, and that's a high.
And look where it is today. Look where it is today. Look where it is today.
I couldn't believe we saw Solana at 200 again. I mean, in November 22, when there was that meltdown, I actually thought, no, it's done. It's finished.
I know. I was there. I was at the Solana breakpoint when all the news went down, and I remember, I'll never forget this as long as I live. We were at the after party. And I knew about FTX, and the news just broke. And we were dancing to Ben Boma. Ben Boma was the big DJ lineup that was there.
Yes.
And we were dancing to Ben Boma, and I just thought to myself, it was the closing party of the Solana the Solana breakpoint. And I thought to myself, is this the closing party of the Solana breakpoint, or is this the closing party for Solana? And either way, I thought, look, there's nothing you can do. Switch your phone off, stop looking at your phone, and dance, and worry about the shit in the morning. That's exactly what I did. And that night, Solana went from $30 all the way down to wherever the fuck it went to, and it was
$8, bro.
Yeah,
$8. It's insane.
Oh, it was a rough ride.
All right. So I think, listen, guys. I think we've done a good job here tonight. Remember, guys, if you're not already subscribed. Whoa, what's going on? Hold on a second. Okay, so so if you're not already subscribed to this channel, if you're not already subscribed to Banter Plus, this is like last chance to subscribe. Last chance, subscribe. This is where we're going to bring you amazing content. There's a massive meme coin show happening on Sunday. 6 meme coin experts. We're going to degen dirty. You're going to need to shower after that meme coin concert. I promise you that much. Tomorrow you've got Sheldon live doing altcoin trading. You've got Dylan live doing altcoin trading on this channel. I'm going to be live on the other channel tomorrow. Carl's going to be up on the other channel.
Tomorrow's interesting. Either there's a dip or we continue to explode. But I think we're going to get some movement, which is good.
So I think for me, if I wake up tomorrow morning and Bitcoin is trading above 66,500, I've got to reevaluate my thesis. If it's lower than where it is today, if it's lower than the 65,500, then I've got to say to myself, look, maybe this correction's still in play. So I think a lot's happening. So join us tomorrow. Lots of stuff, guys. Much love to you, Sheldon, Dylan. Thank you. I know it's 10 o'clock at night here. 10 o'clock at night here. And love you guys madly. We'll see you guys
Much
again
love, brother.
Yeah. I'll see you guys again tomorrow. Until then, everyone, trade well, my friends.